Hey, thanks very much. Welcome back. A true staple of our very, very high-protein diet here on Hurley in the Morning is our official financial advisor to the Hurley in the Morning program, the man that I believe is the best at what he does, Chuck Malamut. This is our regular weekly program all about financial matters. I can tell you, because Chuck does a really nice job with his show prep, I have as many additional items as Chuck has on his list, and none of mine are duplicates to what Chuck will be bringing up in the next 40 minutes that we have. So a lot to do. Chuck leads the Malamut Group at Morgan Stanley's Northfield office, and the following program is presented by Chuck Malamut Weekly, who is a financial advisor at Morgan Stanley. The information, the views, the opinions expressed on this program are those of Chuck and do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast and are subject to change without notice. Neither the information that you're about to hear that's provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Good morning, Chuck.
Good morning, Harry.
Would you like to entertain any of my questions first, or do you want to do your things first?
Well, Harry, since I guess you get straight A's, or actually
the teacher, and that's the teacher that said that.
Was it all A pluses or just A's?
I'll take all A's.
I guess the old adage, Harry 100.
See? Tell everybody.
Shines through again.
Say it again. My nickname at Golden Nugget was?
Harry 100.
Thank you.
Good morning,
All right.
Harry.
Would you like me to start, or would you like to start?
Well, Harry, I think why don't we, if you don't mind, why don't we give your listeners a brief overview of where we have been over the last several weeks, and then you can get into your questions if that's okay with you.
It is.
So if you take a look at last week, Harry, remember one of the things that we mentioned was the word volatility, and it is clearly shining through here at this point in time. Investors last week remained terribly focused again on the Fed and the policies that they are going to put in place. The economic data that we've been seeing, I guess the best way to describe it has been mixed, but does suggest that the Fed action should occur sooner rather than later. And if you look at a 25, maybe 50, ultimately 50 basis point increase in rates, I don't think that's such a bad thing. But the market has a tendency to focus on some details that perhaps I think on a long-term basis aren't terribly important. And actually for savers, this would be hopefully the start of a good thing, because it's been years since people that have money in short-term instruments, savings accounts, checking accounts, money market funds, are receiving any yield on their investments. So we're convinced that rates going higher would ultimately benefit, and certainly the financial sector, as we know it, would be a beneficiary of that as well. But we had a sharp sell off last week, Harry, in media stocks. If you remember, Disney came, earnings were announced. Some concerns, obviously, with ESPN moving forward. And then we had continued.
By the way, I thought they got a really bad rap on Wall Street because they beat their revenue expectations, and for some reason, depending on who you listen to, that was all perceived as not good news.
Well, look, one of the things that we talked about with respect to earnings, obviously revenue, and that's been somewhat of a stretch. Then we talk about ultimately earnings and how they get to earnings. We had a lengthy discussion a couple of weeks ago about mergers and acquisitions and why they are happening today. And then ultimately what happens is when a company comes with their quarterly earnings, they are going to make a projection into the future. And the projection that was made was not taken very well by Wall Street. They absolutely pummeled the stock.
How big of a deal? It's totally unrelated, but I think it had a lot to do with yesterday and the fact that stocks really rose broadly, all three indices. Warren Buffett had the third richest man on the planet. He had the largest acquisition of his lifetime.
Yeah, they Berkshire obviously has a lot of cash. And they found that airplane manufacturing, so to speak, was a really good place to be. So Buffett made the point that, okay, I'm going to see if you're interested in buying and having us buy your company, and ultimately, the deal worked out. So when you put that into play, and then you look at the fact that you sort of go back to where we were last week. Again, he had ongoing weakness in Apple, and the biotechnology sector again got beat up a little bit. Commodity prices had some declines. So at the end of the week, all said and done, the S&P 500 was down 1.2%. Energy sector and the consumer discretionary sectors were the worst performing areas. And believe it or not, utilities that we've talked about all year as being one of the worst performers was the loan sector with respect to positive gains. But then you come into Monday, as we just chatted about, before the market opens, the futures looked firm. And then there was speculation that this transaction was going to potentially take place with Warren Buffett. And the fact that he went out and made the acquisition says a lot with respect to what he thinks the market, where the market is right now. And as a result, a lot of the sectors that have been beaten up, pretty viciously, the materials and industrials, to name a few, had a very, very big day yesterday.
And I want a full disclosure. I went out of the studio for about 45 seconds to speak to the president and one of our directors. So I'm not sure that you said this or you didn't say it. Did you mention the Apple Inc. rally yesterday?
Well, Harry, no, I did not. But
that was big.
But all the, I think yesterday was again that relief rally. We had a 7-day losing streak. Oil was trading its back, retraced itself and traded back to levels where we hadn't seen for 6 months, and that helped. So there were a couple mitigating factors that helped the market. But again, as I mentioned, volatility, August. Not a lot of flow. A lot of people on vacation, and the Chinese devalued their currency
that's one of my
as we were sleeping this morning.
Yes, I want to ask you about that in a moment. How big a deal that is, because that was one of my. I have 4 items on my list for you. How about this, Chuck? How is what will be the third international bailout of Greece? That played into yesterday, too, because there's a belief that there's an imminent deal.
Well, yeah, Harry, you're right, because what happened, part of the...
8:12 and 50 seconds, 8:12 and 50 seconds, Chris. Harry, you're right. Go ahead.
No, Harry, you're right again.
Again. Correction, again.
So contributing to the enthusiasm yesterday was the fact that you have that renewed confidence that Greece and the international creditors were putting into play the final touches on this multi-billion-dollar euro bailout to keep the country, financially stably afloat and meet that very, very important debt repayment to the ECB within the next few days. But again, it's is third strike and you're out, or the third time is a charm. I mean, how is
to me this just does what it did before. When you give somebody now, it's like daddy giving you the credit card again, and then you're going to ring it up again, and then you're going to be just where you were. They're not changing their fundamentals. They're not changing the way that they do business. So they're going to be right back where they were sooner than we even could imagine. By the way, full disclosure, because Chuck is my mentor and I am his protege, when Chuck says those magic words, Harry, you're right, or Harry, you're right again, you have to understand, it's like a paycheck to me. Chuck, let's ask now the expert, Chuck Malamut, to explain China devaluing the yuan. What does that mean?
Well, Harry, you think about it. If their currency becomes worth less versus and its strength,
this is good for us.
Well,
isn't it?
no. You think about it. If it strengthens the U.S. dollar,
that's what I'm saying. Though, wouldn't that make them want to have more?
But what does that do to our to import exports? I mean,
Okay.
you think about it. It's
an imbalance.
And the fact of the matter is that now, there are some obviously structural issues within China. I mean, you take a look at how their economy got built and a lot of it was commodity driven. A lot of it was housing, and if you remember. I remember watching a documentary maybe a year or so ago about a city that was created that sort of emulated maybe Las Vegas to a certain degree, and the city's empty. There's no residents there, so overbuilt, too much excess capacity. And you would think at a 7% annual growth rate, you'd be very, very happy. But you think about where they came from. So devaluing the currency and the fact that it was done and taken everybody by surprise. The markets, U.S. equities right now, as we look at them, Harry, the futures, they're down, in excess of 100 points, give or take. So, again. We're in the middle of August, and you get these stories that come across, and the market just takes them and chews them, and then as a result, positive or negative, you get these movements that the average investor has a real problem stomaching at times.
And this is because of a run of bad economic data, correct?
Yeah, I mean, Harry, look, and I know you're going to disagree with me when I make this statement, and I don't know if I'm going to say you're right, because I don't think I can say you're right.
You'd be disagreeing with yourself then.
No, well, I mean you're partially right in your statement, but what is happening here is that, and I feel the daggers coming out and ready to attack me.
No,
so the July employment report, was solid. and it could very well put.
So we have 93 million Americans not working, kids, and it's the lowest work participation rate in American history. But here is Chuck Malamut, financial executive extraordinaire, saying how solid the job numbers. This is bizarro world, Chuck.
Well, Harry,
I don't blame you for citing the numbers, because you're only required to cite the numbers. But there is a breathtaking level of intellectual dishonesty, not on your part, on the government's part, that just, if I sat here, well, I actually don't sit, I stand. If I stand here and don't push back, I feel dishonest.
Harry, I don't disagree with you on that, but I'm merely going to.
But you do agree we have a simultaneous worst job participation rate since World War II, but really history and recorded numbers. But simultaneously, we're taking victory laps with the American flag, as we're like Bruce Jenner before he was Caitlyn, with the American flag, waving the flag. That we've accomplished something. What
did Bruce Jenner have to do with it? Okay,
I love Bruce Jenner,
right,
and
that's fine.
He won the decathlon.
Good. All right,
gold medal.
I was just trying to figure out how you segued into that one.
Oh,
but that's
because I'm fast.
But all right, so let's take a step back here before you jumped on top of what I didn't even get to finish to say.
Well, you
here.
said how strong the numbers are.
What I was attempting to say, Harry.
And you knew you had to put a caveat before you even said it.
I was going to put the disclaimer on there, but you.
Go ahead.
I said July, and I said employment, and now you buried me.
No, you said more than that. You said how good it was.
The July employment report was quote solid, and could put additional pressure on the Fed to raise rates in September. Now, you have to take a step back, because and again, it's really early or hurly.
You know what's like, Chuck? Let me just throw this in.
Harry.
This is what it's like. This is like painting a crumbling facade and showing it off as a solid structure
but you didn't,
that now looks beautiful, but it's holding by threads. And so if the Fed ever decided to raise interest rates by, quote unquote, the strength of a, quote, strong employment market, which is completely based on dishonesty, that's not good for our country.
That's not the entire picture. So let's
quite a bit of it.
Let me just.
Go ahead.
Can I?
Yeah. You let me come in. Strong had to fight for it, but you let me come in.
It's a tough morning, Harry. I'll tell you what.
No, this is good.
So.
And I got 3 more things on my list.
I don't know if we're going to get to them.
We're going to get to them.
So. I might be bloodied on the ground, but so here's what happens. You think about, again, let me just finish for a second.
My mic is off.
215,000 new jobs were created last month. The unemployment rate remained unchanged at 5.3%. Wage levels, which we have been chatting about, are now starting to languish somewhat. The average hourly earnings rose by less than the expected 0.2%. And when you take a look at what happened this morning with China, the Fed might be backpedaling here a little bit with respect to this rate increase. I mean, not everyone, but most strategists are suggesting that this rate increase is going to happen in September. I
don't think it will.
There are a few in the camp that are saying December, and then there are a few that are saying it's not going to happen at all. So
it's not going to happen in September.
Now, here's what I think the Fed's also looking at. The U.S. Service sector, as we know it, appears to be in pretty good shape. And again, economic reports we talk about, they are oftentimes conflicting. The ISM non-manufacturing survey in July rose to 60.3. It's the highest level we've seen, Harry, in almost 10 years, August 2005. It was a broad-based number. Business activity, new orders, and employment all coming in well ahead of expectations. So the strength in employment is, again, a welcome sign and should put upward pressure on consumer spending. One of the things we've talked about it for years, that three-legged stool. The consumer, you think about it, with these lower oil prices, which ultimately have gotten to the pump for the most part, I mean, not hand in hand, but they get there, the consumer decided to pocket that money and not necessarily spend it. So
because of a lack of confidence.
Well, I do not disagree with you there, and as a result of that, the economy is very, very dependent on the consumer, and the consumer has to go out there and spend.
Chuck, we have to step aside for just 1 second. We're not even going to leave you. The first step towards a beautiful, healthy smile is to schedule an appointment. In fact, I spoke with Shannon yesterday. That is Dr. Chenman's scheduling coordinator. Dr. Alan Chenman, the Smile Center of Linwood, perfecting the art of beautiful smiles. If you're either unhappy with your present circumstances or you've not been going to a dentist because you haven't found the dentist that you can trust and have that comfort and that rapport with, I strongly do ask you to do what I have done, and that many years ago in my case. That is choose Dr. Alan Chenman. He has another practicing dentist, Dr. Henry Salama, that is doing incredible groundbreaking work in the implant field. They do it all at the Smile Center of Linwood: porcelain veneers, dental implants, crowns, bridges, inlays, onlays. They do it all. If you go to smilecenternj.com, click on the Smile Gallery, and you will see the photos of actual and before cases. It's truly amazing. Their office is located at 1999 New Road, Suite D in Linwood, and the phone number, and again, you'll be speaking with Shannon to make an appointment, 609-601-2199. That's general and cosmetic dentistry, perfecting the art of beautiful smiles. General and cosmetic dentistry can give you the smile that will make you happy to show it off. Modern cosmetic dentistry techniques make it easier than ever to give you that bright, even smile. Dr. Chenman has great techniques for teeth whitening. There's a number of different ways that you can go about it, and we mentioned a lot of the other things, the dental implants, the dental crowns, inlays, onlays, dental bonding, porcelain veneers, and more. Again, the Smile Center of Linwood, 1999 New Road, Suite D, Linwood, 609-601-2199. Chuck, you mentioned oil, which is now below $44 a barrel. How about that?
Well, Harry, oil actually yesterday had a pretty good day. It was up over 3%. The trading getting into yesterday at the not all time 6-month lows, we'll call it. That obviously has a major impact in the economy as well. The initial take was, well, this is going to be great for the consumer. If you look at the price of unleaded, nationally speaking, $2.69 as of last Friday versus $3.52 a year ago.
And most of us in this area are paying less than that.
Yeah, and the price of West Texas, which you just referred to, went out on Friday at $43.87. A year ago, over $97. So I think
proving that it doesn't go in half. It doesn't
no,
go
it won't,
penny to
it doesn't
penny.
trade side by side.
Right.
And so what happens here is that in the consumer is pocketing that money, so to speak, or those savings, and they're just waiting.
Chuck, this is not purely a financial question, but it also is not a political question. If we put the boot on the throat of OPEC and truly harnessed our ability in America to be energy independent, we could break them, I think.
You know, Harry, I think OPEC needs to make a move now because they have refused to date. But you know, when you have a excess supply of 1 million barrels a day, it's got to go someplace. And sitting on a cargo ship waiting to be delivered, you think about the risk that you take to even get that oil produced. And if you have those ever-decreasing prices, you get to the point where it doesn't make sense to continue to produce it. So that's why the energy sector, as you know it, Harry, has had a very, very tough year. And, year to date, it is the worst-performing sector, as you would expect, down over 15%.
It's truly incredible. In an unrelated topic, Chuck, and this was my fourth item for your show, then we'll get to the bottom of the hour break, and then we can finish up on the many issues that you have, including your entire
update. You just took control of your show.
Yeah,
how does that work, Harry?
Because we've been doing it for 25 years. Google, so much penetration during its lifetime that actually the word is an action verb. Google something. It's truly amazing when you think about it. And they've created a new company called Alphabet. They've restructured their stock. So Google Inc. is reorganizing into a holding company. What do you think this means, Chuck?
Well, Harry, I think investors, particularly institutional investors, for the longest time were concerned, upset, bewildered, frustrated. I guess the best word is actually frustrated with the way Google reported, what they reported, how they reported. So what they're doing now is they're going to reorganize, and the name I think is great. You think about Alphabet Inc. It sort of captures
kind of catchy
everything. It's going to.
When I first saw it, I have to admit it was strange when I first saw it, but it kind of grows on you.
Well, the first time I saw it, I said, "Well, what is happening here?"
Exactly.
So they're reorganizing into a holding company, and that's going to give the main web operations, as you know it, a lot more independence. And I think what really is good here, it's going to offer a lot of visibility as Google goes in and expands their new business, including internet access, healthcare, and other like. So
my reading of it, Chuck, Google Inc., YouTube, Android mobile software, their other base web products that you talked about will all be a key part of it. But this thing is going to be Alphabet Inc.
Yeah, and I think what's really important here is the fact that you get that increased visibility. You're going to really get to understand more of the financials of the company. You think about it, pre-market, I believe the stock was up 7%, if my memory serves me correctly. It's pretty big move.
My understanding also, and this I know is true, they're not going to make, unless something changes down the road, it is not their intention to make Alphabet a brand. The brands will be what we know: Google, Coleco. They have Google X. They've got Google Capital. They have all these other things: YouTube, Android mobile software. So their brands will still exist, but the Alphabet Inc. is not going to be a brand.
Yeah, Harry, I don't think you're going to have any surge in. Well, let me rephrase that. My opinion is I don't think you're going to have any surge in earnings. I just think they come more to the forefront, and it's easier for investors, both retail and institutional, to clearly understand. You get look under the hood, so to speak, and understand what goes on within the company. So it's obviously viewed as all good news. On a comparative basis, you think about one of the Atlantic City casinos that is a publicly traded company that has a pretty big footprint here in Atlantic City. What they decided to do was the same thing, and they took good assets and put them in one company, put the bad assets in the other company, and that unfortunately hasn't worked as expected. And I'm guessing that you're going to probably see things a little bit different here with Google doing, the creation of Alphabet.
We have to get our bottom of the hour break in there. We have one more segment with Chuck straight ahead. I don't really fully understand it, but they believe it provides clarity. They're moving into things like the driverless cars and these things. I don't know. I don't really know why they're doing it.
Well, look, Harry, think about
it to have a parent company?
No, you think about the history of Google. Remember, when they went to IPO this stock, it was done a lot different. It was done, I think, via a Dutch auction, and everybody could participate, but you couldn't take down big positions. And I think now, it's sort of a step, looking into the future, saying, we need to. Wall Street needs to clearly understand what is going on with this company, and more details with respect to these operating businesses is going to be put that clarity onto the company. Is going to answer a lot of the outstanding questions, and as you can see, pre-market, the market likes clearly what's happening.
But weren't they already up 20% for the year?
Stock was having a good year,
yeah.
for sure. It was one of the few that was performing better than others. But
will you own stock now in Alphabet Inc., or will you own the stock in Google that you already own?
If you own Google shares, I think what's going to happen is you don't need to do anything. The stock's going to automatically convert.
It's going to become
Alphabet. Which is going to represent stakes in the same collection of companies that they have right now.
Could they have used this, Chuck, as an opportunity to change everything and even have a split or something? Could they have really tried? I mean, I don't know why you'd want to do it, because they're up 20% for the year. They're having a really good year. But they could have done that, couldn't they have?
Harry, I think the days of when stocks advance in price and they look to split the stock, to create more appeal, more shares at a lower price. You look at some of the levels where these equities trade now and hundreds of dollars.
Well, this is at like $7.50.
Yeah, but I don't think it's going. I don't think they're inclined to do it now. Obviously, Apple did. I could be wrong, but
here's what I'm saying. I'm not saying they should have done it because I'm not qualified, but just say their stock is 800. It's really 750 something, but say it's 800. If they split 4-1. I'm thinking you could bring a lot of people into the market to buy Alphabet or Google, whatever, at 200, as opposed to 800. Well, where, like, what are you going to buy? Like, hey, a small investor out there, give me 2 shares.
Yeah, but Harry, if you look at the number of retail versus institutional investors, I mean, it's obviously on the institutional side.
True.
And you own
a lot.
You own this stock along with Apple and the other big tech names, not only in individual mutual funds but in exchange traded funds. So I don't think there's much of an incentive for them to go out there and split the stock.
All right, let's get this. That's why we think he's the best in the business. Chuck Malamut. When you call Chuck and his team, the Malamut Group that Chuck leads at Morgan Stanley's Northfield office, 609-383-2010, 609-383-2010. Tell Chuck and his team that Hurley in the Morning sent you. We'll be back. One more power segment. We'll have about 10 minutes when we come back in just 2 minutes. We're back. It's 36 minutes past the hour. Chuck Malamut, the official financial advisor to Hurley in the Morning, continues for all of your financial planning needs. And think about it, no matter what stage in life you're at, either if you're thinking about having children, you have young children, you can get with Chuck and you can take care of everything from college building to vacation planning to retirement planning. We do see, Chuck, interesting to note, just going completely in a different direction, and you hear the talk about it. Baby boomers born 1960 and later, you're not even talking about Social Security retirement age until, if you're born in 1960, it's not 65 for full retirement. It's 67 years old. So I think anybody out there that's been paying into Social Security for 50 years like I have, I've always treated it as though, for some reason, for the longest time, Chuck, like it would all change, that it wouldn't be there, that it wouldn't be enough. Financial planning is very, very important, is it not, Chuck?
Oh, Harry, for sure. And when we have a whole discussion when we're meeting with clients and prospective clients regarding what is your Social Security benefit, when is the best time to take it, and we sort of do a cost-benefit analysis to really understand it. And it's great if we we're using life expectancy to for that calculation. Harry, if you can tell me, when you're going to expire, I guess
that's the problem.
It's real easy to do the calculation, but from what we're seeing here, full retirement age is certainly more beneficial than taking at say 62 or 64.
Yeah.
But again, everybody's financial situation is different.
To people listening, I just took a peek at it yesterday. They send the thing out to you once a year, or now it might be every 2 years, I forget. But you get it every so often. But you can go online and you put in your date of birth, and it will show you a very easy-to-read grid. And it will show you that if you retired at age 62, you're only going to get about half of what you would get. If you were to retire at age 65, you get like 80-some%. And then each month that you go longer before retiring and collecting Social Security, you add to it until you get to age 67. This is, again, if you were born in 1960, as I was. It's one of the first years that they've actually increased the retirement age. It's my life story, kids. It's so true. I remember saying, this is great, but I'm not retiring at 67 anyhow, Chuck.
Well, I heard that Noah, you're waiting for Noah.
Yeah,
to be ready.
Yeah,
so
Noah was my succession.
Yeah, probably about 20 more years. I'm guessing.
At least. Maybe I'm at halftime. Maybe 25.
What is the old adage? The old, 60 is really not 60. It's more like being
60 is a new 40.
Right.
Yeah. So, but that's something to take a look at, though, because if you do take that early, you take a big hit.
Well, Harry, the other advice that that you might take a look at is the fact that you need to go out to that Social Security website and understand exactly, what are your wages correct? And oftentimes there will be mistakes. And if there is a mistake and it works, obviously if there's a mistake, it's not going to work to your benefit for the most part. And with that being said, it's going to take some time to get that corrected.
Yeah, I do want to send a shout out to guest listener Bill. He has written into the program with his financial strategy in terms of futures. And Bill, I want to congratulate you for your focus and for your priorities. And as always, thank you for listening to Chuck's program. We're visiting with Chuck Malamut, the official financial advisor to the Hurley in the Morning program. 609-383-2010 is how you can reach Chuck and his team, the Malamut team, at Morgan Stanley's Northfield office. And you do, Chuck, have a very, very good team.
We do, Harry, and it's without the team, we couldn't get the work done that we do right now. There's no again. We oftentimes, don't say that enough, and certainly that without, everyone on the team, we would not be able to be as productive as we are and to be as client-centric and focused. So, Harry, I think we're getting sort of near the end of today's discussion,
yeah.
And one of the things that we never really chatted about, we mentioned the word volatility. And if you look at where equities have traded so far this year in 2015, the S&P index trading range has been confined to less than 8% this year. And we have gone through a lot of fits and starts over the last 7+ months of 2015. And if you go back historically speaking, this is one of the narrowest bands that we have seen in the last 90+ years. Investors are still, for the most part, pretty anxious. We're starting to see some of our clients not being terribly engaged with equities at this point in time because the news flow is just sometimes so overwhelming and it can kind of absorb you. But we're kind of expecting as we get to into the rest of the year that things will improve and attitudes will change and sentiment will improve. We talked just ever so briefly this morning about Greece. So that ongoing debt crisis, I don't want to say I guess for now it's been resolved. We might take a look at this, 6, 12, 18 months from now and have a different opinion. We chatted briefly about China, and again, the markets,
they're getting a little rattled.
We're taken by surprise with respect to the devaluation. We chatted, and you mentioned about the growth or lack thereof in the U.S. and questions regarding the Fed and what's the Fed going to do. So investors are, you're kind of sitting on the edge of your seat here and saying, well, okay, what's the next move? And and if you put this in kind of in perspective, we only are within a few percentage points below all-time highs within the equity markets. So you kind of get that push-pull and saying, okay, well, what side of the ledger is going to win here at this point in time? So I think, Harry, that you need to be a little bit defensive at this point in time. We think over the next several months the confidence will continue to come back, and ultimately, with respect to the economy and earnings, and things will solidify. And if we can spend less time watching debates that don't really get much accomplished,
that waited 93 minutes or 73 minutes. I don't want to be accused of being a liar. Truth in broadcasting and all, truth in advertising. 73 minutes before they even ask the first economic question. I mean, we're in a period of like 1% and less GDP. And one of the quarters in the recent past was negative. And 73 minutes, the worst employment market since the Great Recession, worst growth basically since the Great Recession, worst growth out of a Great Recession in history. Chuck, I don't expect you to be the expert on Social Security, but because I brought it up, a listener, Jason, wrote me, and now another listener, Harold, wrote in, Harry, can you ask your guest, Chuck, how Social Security will be affected if you retire early at a higher salary and then later get a part-time job still paying into Social Security? Will your Social Security benefit go down as a result of the lower salary when you're eligible to collect it? I do have an answer to that, Chuck, because I read it yesterday, but...
go ahead,
okay.
Because I think I know the answer.
Here's the story to Jason. You can work a certain amount and still collect your full benefit. If you make beyond a certain amount, and I didn't commit to memory what that amount is. If you make beyond a certain amount, then the amount that you will receive will be reduced. That's how they work it. You're allowed to earn so much and still not affect, and it isn't all that much, to be honest. I think they set it up that, hey, if you're retired, but because you might want to go do a little bit out there and stay busy and vibrant and active and keep moving, that you can earn a certain amount, but it is not a big number.
You're right. And that's why it's terribly important that your listeners, Harry, do spend the time first to validate, their Social Security reportable earnings, make sure it's correct, and two, we pay a lot of money to our government, so we should be entitled to get answers, and make an appointment, go down to the Social Security office. They have, obviously all the tools and the software to go in and figure out what those, to get questions to those answers, or get answers to those questions.
I think the number, don't quote me because I'm looking it up very, very quickly. I think you're allowed to earn up to $15,720 additional annual dollars and not affect. Here's another thing I didn't know. And I don't know what I just got. I'm not looking to retire, so I just decided I want to learn about this because I know they're starting to increase the age. I wanted to see how I would ultimately be affected, and Margie, and so on. Margie is a year older than me. She can retire at full Social Security at 66, not at 67. I'm at 67. But another thing that I noted that I didn't know about before is there are very creative ways that if you retire at your full benefit, your spouse is able to collect half of what you collect.
Yeah, and again, that's, Harry,
without affecting their benefit someday.
Again, that's one of the tools that we have with our retirement, planning module that we're using. But the best way to get the best way is go ask the question of the right people and get the answer.
Here's one more thing: a listener is correct, except within 2 years, I believe they're not going to be correct. They're saying that you can work and collect full benefits and collect your full Social Security. But I believe as Obamacare degrades and many of the horrifically bad things start to kick in, I don't think you're going to be able to collect that benefit because that benefit is going to have a taxable event cash value, not like a grand champion by the name of Cash, but a cash value. And so I don't think in 2 years that what the gentlelady listener wrote in will stand. Let's see if I can get Harold's question in real quick for Chuck. Let's see. Yes, this is Harry. As you know, my wife died 5 years ago. I was told at age 60, which will be in 5 years, I can collect her Social Security. I would also be able to collect my pension and work part-time, putting more money into Social Security. Will your guest know how much I would be allowed to make part-time? I think I just told you, $15,720 is the number, I believe. And I'm not 100% sure, since you will be a recipient with a survivor Social Security benefit, but I think that number is fairly solid. Chuck, as always,
Harry,
you bring
time's
it.
up. So, look, I'm going to pull myself off the ground. I appreciate the bludgeoning today, but you did a fine job.
Chuck, unlike Megyn Kelly, there's no bleeding out of your eyes or your nose, so I'm very proud of you. You've been listening to Chuck Malamut, the official financial advisor to Hurley in the Morning. He leads the Malamut Group at Morgan Stanley's Northfield office for all of your financial planning needs. Turn to the man that I turn to, the man that has perfected his concept of total asset management with that all-important asset allocation, and sitting down with you and learning who you are, what are your goals, what are your dreams, what are you looking to do, what are you looking to accomplish at all these different mile markers along the way. You will be in very good hands with Chuck Malamut and the Malamut Group. And the following program is presented by Chuck, a financial advisor at Morgan Stanley. The information, views, and opinions expressed this past hour of the broadcast are those of Chuck and do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast and are subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley Smith Barney, member SIPC. Chuck, I have to tip my cap to you today. You brought it big time.
Harry, thanks for having me, and we'll see you again next week.
Say hello to Cash and Carry for me, and have a great day, Chuck.
Thanks, Harry.
See you, my man. We'll be back. Don't try this at home. I'm Hurley in the Morning on WPG. Talk Radio 1450, South Jersey's talk station.